Welcome to Charts Today. My name is David Linton, and today's edition for Friday, the 13th of March, comes to you from London. And a bit later today, we had a very busy morning, energy markets. The big news is that crude oil has activated a big upside target and that's just kept us very busy. We had a lot of clients in energy trading, and our morning call is just dealing with the charts. So we are seeing prices stabilizing, but after such a big rise yesterday and to a new closing high, which has activated the target, there's just hidden strength there in energy. And of course, crude oil is such a big factor in the 60-minute chart. We've got upside targets as well. We've said bullish today, but it's all very news driven. It depends what happens, but you can imagine that for a lot of energy traders, they've got to decide how to position themselves across the weekend. And the last two Mondays, we've seen big spikes on the Monday coming back from the weekend markets being closed with events in the Middle East. So that's a challenge that whatever happens this weekend will affect what the price does for crude oil, but next week. But the reality is, we do have now upside targets to new highs. So that's not to say that we're going there, but I've learned the hard way: do not ignore the targets. So, and then that, of course, has an impact on other markets. So if we look at the dollar, that's been really recovering. A flight to quality, well, probably more a flight to liquidity, and that's just really driving higher. So stronger dollar. We did just nudge above 100. That's the first time on the dollar index that we've been above 100 for nearly 3 years, 4 years. So really significant there that we are seeing that dollar strength. And a lot of people, of course, calling the end to the dollar. I mean, it has been looking weak, but right now we are above 100, a move above 100 and a sustained move above 100 changes the picture quite a bit. That means other things are falling. So sterling falling, weak numbers out for GDP in January today, and that's affecting sterling as well. That's more really a factor of the stronger dollar, and we are nudging new multi-week lows there. Looking at Bitcoin, that's up 3%, but I'm not really saying that's changed the picture very much. We are still bearish below the cloud on the daily chart, and all right, we're meeting some upside targets on the 60-minute, but we'd have to get back above 80,000, which was the previous support level. That will form a resistance level for sure. So that's really quite key. Now, I like to look at bond markets first, because really that's where we're seeing a lot of action. So we said yesterday, we saw the German bond activate its upside target. So that's a 26% increase in borrowing costs for the German government, which is really significant. And then we've got 35 and 41% beyond that. We are breaking again to multiple highs here. Looking at the long-term chart, you really see the picture: rise, sideways. Remember, the move out of the pattern is often equal approximately to the move in. So bond market's looking pretty worrying. And that's really basically pricing in inflation. And if we look at, for example, the UK market, we've activated an upside target here, a 17% increase for the UK government on borrowing costs. So that's really a massive move if that happens and we break out of this range. And if we look at the weekly chart, we have got some very big upside targets. So the key thing is, the inflation fears are driving this. And Italy is another one. That's a bond market that has activated an upside target. Very big bond market, the Italian bond market, and seeing indebtedness there is going to be a feature. We're seeing it in France and other economies as well. Japan is the big worry, as the biggest indebted, 250% of GDP as their debt level, and that's coming back on the cards. If we look at the short-term chart, you can see the targets are all over the place, but there's some very big upside targets on the longer term charts. And so, these buying thrusts are what produce these targets. US bond yields going higher as well. If we look at the 30-year yield on the US, we're seeing here upside targets, so really quite key. The Aussie market has already activated. They've got inflation running faster than most other markets, which is why they've been raising rates already. In the UK, we're talking about rates not being raised, and in Australia, they're already raising rates, and so those targets are already there. India, very susceptible to the oil price out of the Middle East. And again, they've got an upside target, 7%. That's really high. And then if we look at Russia, I mean, not that many people really care about Russia, but the fact is that target was given back in June when we were at 11% to 15%, and that's where we've got to. And Turkey, I mean, spare a thought. Their yield was 32% at one point. We saw some downside, but that's starting to get back to 30%. So really big inflationary pressures there. Now, looking at markets, and the key thing is if we look at just the major indices in the US, the Dow Jones Index closed below the cloud, first time since we were below the cloud since April last year. That's on the Dow. If we look at the Nasdaq, it also closed. It's been below the cloud for several weeks. Still hasn't activated the downside target, but that oil price increase really potentially will have a big impact. And if we look at the sorry, that's the Aussie market. If we look at the S&P future, that also closed below the cloud for the first time since March last year. So that's a 12-month crossing the cloud. So these trends are changing, and that's just a key. Look at the 60-minute chart for your downside risk, and that's the whole point of changing to the different time frames. Now, other markets, just quickly, we're looking at in the UK, we've got the FTSE is actually up. That's primarily because it's driven by the oil majors, and we've got BAE Systems looking very strong. That's activated an upside target. You want to be in stocks that are above the cloud with upside targets, basically, and there are not a lot of them. About a third of the UK market is higher today in terms of stocks moving higher. So 2/3 are falling, a third are higher, but if you go to trends, it's an even smaller number. And here we see Shell. That target was given in August at 2,700 to 3,300. That's where we are now. You just cannot ignore the price targets. And I'm grateful to the people who are emailing me saying how much they appreciate Charts a Day. Please like it on YouTube. You can just click on YouTube and like, and please subscribe. It helps the channel grow and means that more and more people are following it. Share the love. And if we look at the Dow, we saw here nearly only 4 stocks were up yesterday in the Dow Jones. So that we are seeing, even though the indices are holding up, we are just starting to see movement there. Nvidia, a stock we've talked about a lot. Still waiting to see if we activate this downside target on Nvidia. That's on the long-term chart, but that's a long-term target. Again, we've got a move below 170 on Nvidia would be bad news. And we've seen stocks like Oracle reporting results and then prices falling away, but pretty much tech all falling. Walmart bucking the trend. This has been a star performer. Do have an unactivated downside target here, but upside targets all met that were given. 3 targets given last year, all met. So again, you just can't ignore that. So it's going to be a challenging week. All eyes on the oil price. That's going to be the quite key. We're seeing gold. You would expect gold to be a safe haven, but it really has got targets in either direction at the moment, and waiting to see if we activate a downside target. So it's not a dead cert that gold will rise in times of war. So it's all about what happens in the Middle East at the moment, but that oil price, if we see new highs in the oil price, that is going to impact bond markets, currencies, and stocks. So do keep a watch. Have a good weekend. Until Monday, happy charting. Bye for now.